Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock with news. International bond yields are still rising sharply and the momentum is rising. It is trashing our currency. And although most other currencies are struggling to stay with the greenback, we are doing relatively worse. The global economy has lost momentum in the wake of Russia's war in Ukraine, which is dragging down growth and putting additional upward pressure on inflation worldwide. That's according to the OECD's latest interim economic outlook. They now say global economic growth will be a modest 3% this year before slowing further to just 2.2% in 2023. This is well below the pace of economic growth projected prior to the war and represents about $2.8 trillion of lost economic activity in 2023. Meanwhile, in the US, the Chicago Fed's National Activity Index was unchanged in August, but its July reading was revised higher. But the Dallas Fed's factory survey, which is already struggling, fell further in September. Incoming new orders are slowing now. This survey is more heavily weighted to the US oil patch than most other regional surveys there. And the Chinese central bank made a surprise announcement yesterday, saying it would raise their required foreign exchange risk reserves to 20% from the current zero. This announcement marks the latest policy measure to stem the faltering yuan, which officially fell below 7 to the US dollar yesterday, following the offshore trading pattern late last week. And England's economy seems to be going from bad to worse. Investors have panned their recent policy moves as deeply unstable, and now an attempt by the Bank of England to reassure markets has fallen well short, compounding pressures on them. A US Fed official has weighed in about how bad policy in the UK has wider implications. In fact, it will probably not only be the UK that starts to raise rates out of cycle to contain their problems. This trend may spread, and even if the out of cycle trend doesn't spread widely, future benchmark rate hikes could well be supersized. The RBA and the RBNZ are two central banks making policy decisions over the next week. The RBA on Tuesday, October the 4th, and the RBNZ on Wednesday, October the 5th. They will be facing fierce scrutiny this time. And the US Treasury 10-year yield starts today at 3.89% and 20 basis points higher than this time yesterday in a new aggressive push up. Almost as much in one day as we had all last week, and that was a lot. And it's a 12-year high now. The price of gold will open today at $1,628 an ounce. This is down $17 from this time yesterday. And oil prices start today $1.50 lower at just under $77 a barrel in the US, while the international Brent price has fallen $3 to be just on $83 a barrel. These are new 8-month lows. And the Kiwi dollar will open today at just on 56.4 US cents, another full 1 cent drop since this time yesterday, and now close to the pandemic low and the rate that applied in April 2009. Against the Australian dollar, we're 0.5 cent softer at just on 87.4 Australian cents and a new 9-year low. Against the euro, we're 0.5 cent softer at 58.6 euro cents. Against the yuan, we're now under 4 yuan to the New Zealand dollar, and that's lowest since 2015, except for the pandemic. That all means our trade weight index starts today at just on 67.1 and down 80 basis points to an 11-year low, also pandemic accepted. Get more news affecting the economy in New Zealand from interest.co.nz.